Welcome to StockStudio. Get ready for a high-energy 10-minute deep dive into the world of Snap Inc. That's ticker symbol SNAP.
That's the one.
We're not just going to throw numbers at you. No, we're on a mission here to uncover the real story behind Snapchat's parent company.
Yeah, figure out what's really going on.
Exactly. Its challenges, where the opportunities might be, especially with how fast social media and digital ads are changing.
It's a dynamic space, for sure.
We've got the latest analyst intel, Argus Research, report dated April 30th, 2025, and also insights from Morningstar, key stuff around the same time.
Good sources should give us a solid picture.
Right, so buckle up. This is going to be pretty interesting.
Okay, let's dive in. Snap Inc. Most people know them for Snapchat, right?
Yeah, the disappearing messages, the filter.
Exactly. It's all about visual communication, ephemeral messages, stories. They kind of pioneered that format, didn't they? And those augmented reality lenses.
The AR stuff is pretty core to them.
Definitely. Now, how they make money? Primarily advertising. You see sponsored geo-filters at events, ads in publisher stories, Snap ads, sponsored lenses. That's the bulk of it.
Okay.
They also have a couple of other things going on. The AR spectacles, well, they exist.
Haven't exactly taken over the world, have they?
Not quite. And their subscription service, Snapchat Plus Lite, that's newer but seems to be picking up steam.
Right.
But their big stated goal, it's kind of lofty. They want to reinvent the camera to improve how people live and communicate using richer visuals.
Reinvent the camera.
Okay.
Precious. So how's this camera reinventing company actually doing performance-wise? What are the number crunchers saying?
Well, okay, their first quarter of 2025, it actually looked pretty good, better than expected, actually.
Wow. How so?
Sales and their non-GAAP earnings per share both beat the consensus estimates. Sales jumped 14% year over year.
14%, not bad. What drove that?
Mostly direct response advertising. You know, the ads designed to get you to click or buy something right then and there.
Gotcha. And earnings?
Non-GAAP EPS more than doubled, up to 0.08 cents.
Doubled. Okay, that's a strong number.
Definitely catches your eye.
And users. You can't have a social platform without users. How are they doing there?
User numbers are also looking pretty healthy. Daily active users, DAU, up 9% compared to last year.
Okay.
And up 2% just from the previous quarter, Q4 2024.
So, steady growth. Where's it coming from?
Here's the thing. Most of that user growth is coming from their rest of world segment.
Okay. Not North America or Europe primarily.
Less so there. And monetization per user, ARPU, that's ticking up too. Mid-single-digit percentage growth globally. So, positive signs.
All right, strong Q1 headline numbers. User growth looks okay, but I feel a but coming. What's the catch? What are the analysts worried about?
Well, you read my mind. Yeah, despite the good quarter, there's definitely some caution out there. Argus Research, they reiterated a whole D rating.
Holding steady. Why?
Well, a few reasons. Snap didn't provide guidance for the second quarter. They cited economic uncertainty.
Withholding guidance isn't usually a great sign.
It makes analysts nervous, yeah. Argus also pointed to Snap's plans to cut costs, which suggests maybe some pressure. And then there's the competition.
The elephants in the room.
Exactly. Meta and TikTok. The pressure is intense. Argus also feels Snap might still be seen as kind of niche for advertisers compared to the massive reach of the others.
Okay, so Argus is cautious. What about Morningstar? They usually take a longer view, right?
They do. And interestingly, Morningstar actually lowered their fair value estimate for Snap, dropped it from $13 down to $11.
Lowered it, even after the good Q1 results.
Yeah. Their reasoning also circles back to the macroeconomic uncertainty, specifically mentioning potential tariff impacts squeezing digital ad budgets.
Broader economic worries.
But they also raised a really critical point. They think Snap's monetization and its ability to actually make money from users might just be weaker than what Meta and Alphabet have built.
Less potent, basically.
That seems to be the concern. Though it's worth noting, even at $11, their fair value was still above the stock price at the time, which was around $9.09.
So, still suggesting some potential upside, but less than before, and with caveats.
Exactly. You've got this disconnect, good recent numbers, user growth, ARPU ticking up, but this cautious near-term outlook because of the economy and competition.
Let's dig into those challenges then. The competition. How bad is it?
It's fierce. I mean, really fierce. They're constantly fighting for user attention and those advertising dollars against giants. Meta has Instagram, Facebook. TikTok's growth has been, well, explosive.
Hard to compete with that scale.
And the nature of social media, features get copied fast. If Snap comes up with something cool, Meta or TikTok can often roll out their own version pretty quickly. Makes it hard to keep a unique edge for long.
Right. And the monetization piece you mentioned.
Yeah.
Even with hundreds of millions of users, turning eyeballs into dollars is still a hurdle.
Seems to be. They have over 450 million daily active users. It's a huge audience.
Massive.
But their ability to target ads effectively, to engage users in ways that really drive ad performance, it's seen as lagging. Maybe their algorithms aren't quite as sophisticated as the competitors.
And of course, being so reliant on digital advertising makes them really sensitive to any pullback in ad spending or shifts in the economy.
And you said most user growth is outside North America and Europe. That sounds like a challenge, too.
It's a double-edged sword, yeah. It's great they're growing users internationally in the rest of the world, but those users typically generate less revenue per person right now.
Lower ARPU.
Exactly. Meanwhile, growth in North America and Europe, the markets with higher ARPU, is slowing down, or even potentially shrinking. That's a worry.
Definitely.
And this ties into a big one for investors. Morningstar gives Snap a no-moat rating.
No moat. That means no sustainable competitive advantage, right? Like a castle without a moat to protect it.
We got it. Morningstar isn't convinced Snap can consistently fight off rivals and earn excess returns over the next decade or so. The competition is just too intense.
What else contributes to that no moat view?
Well, they also keep spending quite a bit, investing in user growth, new features, AI capabilities, and they're still pushing spectacles.
Ah, yes, spectacles. These investments could pay off long term, but right now they eat into profitability. And spectacles, well, the track record isn't exactly stellar.
Fair point. Any other risks lurking? ESG stuff.
Yeah, ESG is always on the radar. For Snap, potential issues could involve user data privacy, platform safety, especially with a young user base, and they've had some past lawsuits around workplace issues too. Things to keep an eye on.
Okay, wow. So quite a few hurdles. But it can't be all doom and gloom, right? A platform this big must have some serious upsides. What's the bull case?
Oh, absolutely. That huge user base, over 450 million DAUs and growing, that's fundamental. It's a massive asset.
Especially with younger users.
Exactly. Their group on Gen Z and millennials is incredibly valuable to advertisers. And like we said, the growth in international markets, even if monetization is lower now, that's huge future potential.
And you mentioned ARPU is actually trending up.
It is. Global ARPU is increasing. They are finding ways to make more money per user, seeing growth across North America, Europe, and internationally. And the really bright spot, Snapchat Plus Fun,
The subscription service, how's that doing?
it's doing really well. Revenue shot up 75% year over year. Subscribers jumped 59%. They hit 15 million subscribers.
15 million paying subscribers. That's significant.
It is. And it's a recurring revenue stream, less sensitive to the swings in the ad market. That's a big positive.
Okay, that's encouraging. Anything else on the plus side?
Well, they seem to be showing better operational discipline. Their operating loss improved, suggesting they're managing costs better.
Getting more efficient.
Seems like it. Plus, those investments in AI, new features, if they hit on something big, it could really boost engagement and monetization. They're also trying revenue sharing with creators to get better content on the platform.
Trying to build out that ecosystem.
Right. And maybe one for the value folks. Morningstar's $11 fair value estimate compared to the recent $9-ish price suggests it might be undervalued, right? Trading at a price fair value around 0.83.
So potential value there if you believe Morningstar's numbers, even with the lower target.
Could.
All right, so let's put it all together. If someone's looking at S&P stock right now, how should they think about it from an investment strategy perspective? Give us the bull versus bear.
Okay, the bull case. You're betting on that huge young user base. You think digital ad spending will grow and Snap will grab its share. You believe Snapchat Plus and maybe even other things like AR commerce will become significant revenue streams.
Betting on the potential.
Essentially, yes, leveraging that user base.
And the bear case. Why stay away?
The bears are worried about the spending. Will it ever lead to consistent, strong profitability? They see the competition, Meta, TikTok, is just too powerful, constantly squeezing Snap on ads and users.
Brand governance.
That's another bear point. The share structure, with public shareholders having non-voting shares, it limits management accountability. That's a red flag for some investors.
Okay, and what's the overall vibe from the analysts we looked at?
It's mixed, really. Argus is playing it safe with a hold. Morningstar sees some upside relative to their recent price with their $11 target, but they're clearly cautious about the near term, the economy.
And that uncertainty rating.
Yeah, that's crucial. Morningstar rates Snap's uncertainty as very high.
Very high. What does that translate to for an investor?
It means the range of possible outcomes is really wide. Things could go much better than expected or much worse. It screams caution. Investors probably need a significant margin of safety buying well below fair value to compensate for that level of risk.
So putting it all together, what's a sensible approach here? Cautious, aggressive.
Given everything, the good Q1 numbers versus the guidance withdrawal, the user growth versus the competition, I'd lean towards cautious observation.
Watch and wait.
Kind of. Watch closely. Can they give clearer guidance? How do they really stack up against rivals in the next few quarters? Can they keep boosting ARPU, especially in those key markets?
And keep an eye on Snapchat plus scale.
Definitely. That subscription growth is a key positive trend to monitor. Now, if you have a really high tolerance for risk and you truly believe in the long-term vision, maybe a small speculative position could make sense. But you have to go in knowing it's high uncertainty.
Understand the risks involved. Got it. Okay, time for a little levity. You ready for the joke?
Uh-oh. Hit me with it.
Why did the investor ghost Snap?
Why?
Because their financial reports kept disappearing.
Okay. Ephemeral reporting. I see what you did there.
All right, let's wrap this deep dive up. Quick summary.
Sure. Snap's got positive momentum in user growth and ARPU. That's good.
Yeah.
But they face intense competition and macroeconomic headwinds clouding the near-term picture.
Leading to analyst caution.
Right. Argus says heista. Morningstar sees some value but flags high uncertainty and near-term risks. It's a mixed bag.
So for you listening, remember, always factor in your own risk tolerance. Do your own homework. This isn't investment advice, just our analysis of the situation.
Absolutely critical.
And here's something to chew on as we finish. In this constantly changing world of social media and digital ads, can Snap truly carve out a sustainable, profitable niche for itself against these giants?
Yeah, and what role will things like augmented reality or that growing subscription base actually play in their future? Big questions.
Definitely food for thought.
And to leave you with a bit of inspiration, remember, the only way to do great work is to love what you do. That's from Steve Jobs.
A great quote to end on. Thanks for joining us for this deep dive.